Hey guys, welcome back. In today's video, we are talking about the price target upgrade on AMC, the infinite potential, the thousands of dollars per shares, and many more in this video. First, we're taking a look at this. One of the things we talked about recently was the upgrade given to AMC. And now on top of that, we have Wedbush also giving AMC an upgrade as well. You can see the upgrade AMC to outperform, citing stronger film releases, reduced 2026 debt risks, and international expansion. So now finally, more and more people are acknowledging what AMC are doing. They're realizing how well the fundamentals are improving on AMC. You can see they've now given the stock an outperform from a previous neutral position where they've raised the price target from $3 to $4. Now, one of the things I want to talk about is that obviously for me, this is still an extremely low price target. Now, bear in mind, it is still, of course, a 200% increase from where we are. But the things that we have to look at is the fact that people are not acknowledging what AMC is doing. They're realizing the expansion, they're realizing the innovation, and more importantly, they're realizing the debt risk that's being reduced. They're realizing that AMC has restructured correctly, has paid off correctly, and have done a series of good decisions. The only thing is for me is that, of course, the price target is still relatively low. $4, I definitely think is something that AMC can easily reach. But I do think it's a good sign that we're now seeing more and more people realizing what there is for AMC. And I think the shift in media is definitely already showcasing that. One of the things to mention though is that it's interesting how the media is shifting their view on AMC as soon as we see institutional ownership go up. And this truly just talks about of what we've said. They don't want retail to make money, they only want institutions. And so now as there are more institutions who will benefit from this, suddenly they're talking about how good AMC is doing. But bear in mind, they have always been doing extremely well because the things that we are seeing right now, we knew that was going to happen. And despite this, there are of course still bears, and bears are still analyzing AMC like it's only a movie theater chain, while management is trying to turn 300 plus theaters across 89 markets into a nationwide live entertainment network. Now, this, of course, is the biggest things that we've been talking about recently. It's one of the things that has caught people's attention, which is Arena 1. Now, remember, Arena 1 is not just concerts on the screen. It's real-time interactive concerts, nationwide synchronized audiences, and premium ticket pricing. We have concession attached, minimal additional infrastructure needed because AMC already controls and operates the theater footprint. So we talked about how this is going to be a great idea for AMC. We've already seen the success of this with our past experiences, and so we know how well this is going to continuously do for us. And so we are expecting a massive boost in the revenue and of course a massive boost in the profit. And this is what we talked about with how AMC has made the right decisions. And with this, we're going to be then seeing even more debts being paid off and even more investments into infrastructure. Now, it doesn't just stop there, because not only do we already have the additional infrastructure because AMC already controls this, but the potential deals that there are. You can see Adam made the backroom deal with Ellison. Adam knew the Arena 1 deal was consummated. Adam likely told Ellison this, and Ellison likely told Adam, back me and I can help you with that deal. Where Paramount Pictures and Warner Music Group have closed a multi-year first look deal that will see both companies partnering on theatrical films, drawing on the lives and music of WMG's roster of artists and songwriters. Now, this is containing a massive catalog of course, very, very famous singers. You can see some of the ones mentioned here. Now, this is what we've said with the potential deals that are being made, with how Adam Aaron is making the right decisions, with how this Arena 1 deal, despite how good it already is, don't just be blinded by the short term, but think about the potential it has. Think about everything else that it can do. Think about the partnerships, that collaborations that it's going to bring. All of these are extremely, extremely good for AMC. And it's why I said that this boost in revenue isn't just going to be what we can see, but it's going to be a whole lot more that we haven't even thought of that will probably come out. Because another thing on top of this is the opportunities, the other infinite opportunities that it creates for AMC to bring countless live broadcasts into Arena 1 and AMC theaters. Now, one of the potentials is, of course, Formula 1, where we are seeing this with quality sound with the cinemas. Now, the reason for this is because we have seen how Adam Aaron wants to go into this. We can already see here that Arena 1 AMC theoretically can be used for F1 as it's powered by Tata Communications. But another big thing about this is that this is only one of the many. Like we've said, there is infinite potential and there is countless amount of opportunities that's out there. We know some of the things that Adam Aaron has wanted to do has always been college sports as well. And again, for people who are in America will definitely know how big that is as well. So there are multiple things that AMC is able to implement, is able to apply that will really add the boost to this. You can see how excited I am about this because, like I've said, this is something that I definitely think will put a very big boost on the balance sheet. This is something that where I think if it goes towards what we are saying, how well we think it can do, then it really would be a whole new business for AMC. It very likely has the ability to match what they are already doing now. And we can easily see the revenue go up by 50%, by 100% because of the potential that this can bring. And that's why I'm talking about how this is something that can easily shift AMC's dynamics and put AMC towards that next level. And now on top of this, again, for the short sellers who are attacking AMC, and for the people who are watching and maybe haven't done the research, you have to remember what AMC is doing. The media articles are always extremely strong on bashing AMC, but they don't talk about what AMC has done. But here's what AMC has exactly done. New revenue line with Popcorn, new revenue line with Cinema Suite, partners with DoorDash, upgrade to laser projection in theaters, upgrades the seating plan, refinance the debt note, negotiates the Odeon debt note, introduces XL and XFL large screen format, and more and more. You can take a pause at this and watch all of the things here. And this is just some of the things that AMC has done. Of course, there is still so much more than this as well when we talk about what we took future projections, when we talked about some of the potential things that what we can do. But this is exactly what AMC has done. But this is something you don't see in the media article. You don't see how media articles are saying that AMC right now, a big reason for why people are choosing to go to AMC to watch theaters is because Adam Aaron had the idea of investing into premium screens way before the box office even boomed. And it's precisely because of that we're able to see AMC see the prosperous revenue right now. And so this is some of the things that you have to realize of what's going on. When we talk about the key bullish drivers, Q1 2026 earnings beat, the debt refinancing, the box office recovery, undervaluation signals, diversified revenue. These are all things that's applying to AMC right now. These are all the reasons for why, firstly, we're seeing they're giving upgrades to AMC. But secondly, why institutions have been continuously accumulating AMC at a pace never seen before. Now, when you have the bulls, you obviously have the bears. And when you have the people who are buying into AMC, you obviously have the people who are shorting into AMC. And you can see the FTDs for AMC right now, where the latest data shows millions of shares failing to deliver daily, which we all know are synthetic shares being created to suppress the stock price and hide its real value. So you can see from the FTD data right now, and especially at a time like this, where we saw AMC go up, where we are seeing AMC improving fundamentally, and all of a sudden you see FTDs ramping up. Now there's a big reason for this, and you can still see it in the chart as well, where we saw 14 million in volume, where the short interest dropped since yesterday, which means shorts will have to buy to cover those shares, but still AMC dropped. And that's obviously BS, because if we take a look at this, the max pain was 150. And as we knew that max pain was 150 and AMC closed at 150, what we also saw was suddenly an additional 10 million shares for short, like you guys can see here. And this is what we've said. When you see this availability, it very likely is synthetics, or there are people who are actually lending these out. Now, in terms of why there's 10 million we talked about is because they wanted to deploy them on Friday to pin the stock right around 150 level. We talked about how deep in the money 150 call options and just deep in the money options in general is something that is deadly towards these short sellers, and they obviously don't want this, so they are borrowing shares. One of the things we talked about is where these shares are coming from. Now, firstly, we talked about in the past, when you see a sudden boost in short shares availability, it very likely it's synthetics. However, because of the recent change in structural ownership, what we could be seeing is that potentially it's firms that are lending these out. We talk about Discovery, with over 46 million shares. Now, a potential thesis about this is that, assuming you're aware of a huge hidden AMC short interest and knows protectors will do anything to delay forcing its closure, and you own 46 million shares and plenty of cash, how do you maximize your outcome? Maybe by lending them your shares while buying their shorts. And so a potential thing that is that Discovery's lending out shares because they know that institutions are willing to pay a very good amount for these shares. And what they are then doing with the shares, with the money that they are getting, the premium, is that they are then buying more shares, which force the shorts to create more synthetics. Now, if shorts were forced to create more synthetics, then they will obviously have to borrow more shares or at a higher price. And then Discovery can keep making money, keep buying shares, where ultimately, when it squeezes, they're able to then make even more money. And that's a potential thesis. Now, I'm curious to what you guys think about this, because I get it on multiple perspectives where, one, it's frustrating because they're lending out shares and it's suppressing AMC. But on the other hand, is the fact that this will then cause them to actually increase the squeeze price. And so there's a lot of things to obviously be considering here, and this is a big reason. And then amidst all of this, as we see the fact that shorts are in need of shares, as we see the fact that FTDs are suddenly increasing, now all of a sudden, Citadel Securities is clearing their own stock options, breaking away from Bank of America. So the coincidence that this is happening, GME kind of going up, AMC seeing all of these movements, and suddenly Citadel are starting to clear their own stock options. We really talk about how this is all, a bit coincidental, how all these lines up correctly. And it just goes on to talk about what's happening behind the scenes. If you're still yet to think that shorts are not affected, these are the signs that they are giving us right now. And the big reason for this is because here's how it works. AMC will MOAS to multiple thousands of dollars per share in order to keep share prices affordable. And this is something that shorts are afraid of, because ultimately, when AMC squeezes into the thousands, tens of thousands, they are going to be the ones that are going to be hurt. And it's why we've also talked about how institutions want to jump in on this. You can imagine how much Discovery can make with 46 million shares if each shares would be able to sold for $1,000 for $10,000. And even at a lower price, they're still going to make a lot of money. And it's why they're choosing and trying to gain on this opportunity. And it's exactly why I think it's in their best interest to obviously apply as much pressure to the shorts as possible. We have to remember they attacked AMC, the stock, AA, shareholders, the movies, and shut us down. We saw companies double cross AA, we had several frivolous lawsuits, but yet we are still going to win, and this is already what we are seeing. And on top of this, we had the Cinemax CEO Crowley broke the news in his earnings that Sony has fallen in line with other studios and pledged a minimum of 45 days going forward. So we're going to be seeing a bigger expansion in the box office as well. Along with this, you're seeing how old movies are still seeing seats being sold out, and I think that's very, very good. Furthermore, Jim Cramer has just said that GameStop isn't as hot as it thinks. Now, as much of a meme as this is, you can already expect what is about to happen, especially with all the news that's been going around recently. On top of this, we are seeing Barron's warns of a potential short squeeze on GameStop. And because what they're saying is that if eBay rejects the deal, the unwind of merger-related shorts could trigger a squeeze. But we talk about how this is going to obviously cause a massive fluctuation anyway. We're already seeing the volume and the volatility that's within this. So this is something that definitely everyone should keep a close eye on. Another big thing is BlackBerry, where we're seeing BlackBerry go up. Now, I personally myself have also bought into BlackBerry shares. The reason for this is because of the recent interest in Nokia as well. And when you talk about Nokia, you definitely should be looking at BlackBerry as well, especially with the past history that it has. And if you take a look at this, again, FTDs, dark pool, all of these things happening on AMC, on GME, you start to get what is going on. Another big thing is MMTLP, where we're seeing FINRA agree to hand over sensitive trading, investigation, and market data to the MMAT bankruptcy trustee. And that's something that we definitely want to see as well, because it should bring light towards the market. And then finally, where we're seeing another global fund capping the outflow, as we're seeing more and more investors trying to get out. They really are just trying to warn us something. As always, this is Financial Advice, and I'll catch you guys next time.